What does America need to do to avoid default? In recent days, information about the US possibly defaulting on debt has been spreading, making many people worried. Recently, President Joe Biden and congressional officials began discussing raising the public debt ceiling. After a period of closed discussions, the US government is gradually forming an agreement in which 4 key issues are being carefully considered. However, many people still cannot help but ask, what will happen in the worst-case scenario if the US defaults on its debt? Why must we raise the public debt ceiling? The public debt ceiling is the legal ceiling on the maximum amount of money the government is allowed to borrow to pay debts and expenditures. When a loan reaches a certain prescribed threshold and cannot be borrowed again, it will be considered to have hit the ceiling. Most countries around the world establish a public debt ceiling as a percentage of their gross domestic product, meaning that borrowing is often linked to the scale of the GDP, allowing for greater borrowing as the economic GDP scale increases. In most countries, public debt is below 100% compared to GDP. But there are also many countries with high debt, such as Japan currently at 226%, Singapore 144%, and France 113%. In the case of the United States, when calculating the debt to GDP ratio, this country is borrowing at 123% compared to the amount nearly reaching the ceiling of 31.46 trillion USD. Among developed economies, only the United States and Denmark have set an absolute debt ceiling. But in the case of Denmark, it is purely symbolic as it is so high that it will be a long time before it can be reached. Specifically, the Danish government can currently borrow up to 2,000 billion krone while they're actually borrowing 323 billion krone. Recently, Denmark has had a budget surplus, so borrowing is becoming less and less, and there is an opinion that the government is having a headache because it has a lot of money and doesn't know what to do. Meanwhile, in the United States, public debt has increased from $408 billion in 1922 to $30.09 trillion in 2022 over a span of 100 years. Lawmakers have continuously taken steps to carefully limit government spending and then raise the debt ceiling to allow for further borrowing. This time, the ceiling has been set to touch only the threshold of $31.46 trillion, which is fast approaching, due to the fear of maturity without having money to repay the debt. The National Assembly is recently working fiercely to resolve it. In fact, the USCongress often has to do this. They've acted 78 times since 1960 to discuss and decide to raise the public debt ceiling to help the government continue to borrow money to pay off due debts. But this time it may be more difficult, and in the worst case scenario, the United States could technically default, pushing itself and many countries around the world into an unprecedented crisis. 4 things Mr. Joe Biden needs to compromise on to prevent the US from defaulting on debt. President Joe Biden and congressional officials from both parties have begun discussions on raising the debt ceiling on May 16, 2023, marking the second week of debate to prevent the US from defaulting on its debt. According to BBC, after a period of closed discussions, the two sides are gradually forming an agreement in which 4 key issues are being carefully considered. First, the US Treasury currently has billions of unused dollars allocated to support state and local government businesses dealing with the COVID-19 pandemic. The public health emergency has now officially ended, therefore Republicans are trying to recover this money. President Joe Biden has also expressed support for this move because the funds currently have no clear purpose and the withdrawal does not directly affect any programs. This is the easiest issue to negotiate in debt ceiling negotiations. Another topic of discussion was streamlining the licensing process for private energy development companies by the federal government. This is a key concern for Democratic Senator Joe Manchin from West Virginia. Manchin said that Democrats agreed to his plan to reform the permitting process for energy projects in exchange for his support of President Biden's bill to boost green energy investment and healthcare spending in 2022. However, in reality, the US Congress never actually approved Mr. Manchin's reform plan after environmental protection lawmakers showed off their strength within the Democratic Party. Republicans are eager to push for this reform, and now that they have some power, they could make it a condition of the debt ceiling package that forces Democrats to make certain concessions. Another challenging issue for President Joe Biden is the budget constraint for the fiscal year 2023-2024. This constraint functions as a guideline without binding nature to establish the federal budget, and it can be altered during the spending process as the government allocates funds to specific programs. But the figures set out in today's negotiations will shape debates later in the year as lawmakers debate and decide exactly how much the federal Treasury will spend. What President Joe Biden and the Democratic Party are also hoping to avoid is something the Republican Party is pushing for, which is federal spending cuts, especially for new programs and spending plans that the Democratic-controlled Congress has passed during the first 2 years of President Joe Biden's term. The last thing that is also the biggest sticking point in negotiations with the current debt ceiling is probably the Republican Party's proposal for programs to support the poor. They assume that if they had received financial food assistance and health insurance, people below or near the poverty line should actively seek employment or enrol in an educational program. Conservatives often complain that government aid to the poor is riddled with fraud. So Republicans propose that healthy adults without dependent children be subject to work requirements to receive benefits under the SNAP Nutritional Assistance Program until they turn 55, increased from 49 years old compared to current regulations. However, the Democratic Party views this level of support as an essential component of President Joe Biden's expanded social safety net, which they believe has contributed to a 46% reduction in the child poverty rate during the first year of the president's tenure. In particular, expanding the health subsidy program for the poor is central to the Democratic Party's internal efforts to reduce the number of Americans without health insurance. Recently, a group of Democratic-leaning interest organisations, including the non-profit organisations NIACEP and Urban League, sent a warning letter stating that the President of the United States should not negotiate new conditions for the poverty reduction program. The letter argues that every low-income household in the country should receive basic food and healthcare support based on their ability to work. If Mr. Joe Biden and Republicans can agree on some of the above, and the President can convince Democrats to agree, the US Congress has the ability to raise the debt ceiling for a certain period of time. But what if the worst case scenario is that the US cannot raise the debt ceiling and defaults? What a terrible tragedy if America defaults on its debt. Economic experts warn that if America defaults, it will be a nightmare not only for America but for the whole world. Wall Street will probably be the first point of trouble. So far, the financial markets have not moved too much on the debt ceiling issue, but that is expected to change as the government gets closer to default. Experts say the shock of default will spread throughout the financial system, including stocks, bonds, mutual funds, and derivatives before spreading to the entire US economy. Stocks are likely to fall sharply in anticipation of a broader recession as interest rates rise, and investors pull money out of the market to preserve their short-term access to cash. The banking industry, already wary of new lending, may tighten further. If the deadlock continues, the impact will quickly spread from financial markets to the broader economy. That could also collapse the already cold housing market. A recent report predicts that defaults will push mortgage rates above 8% and push home sales down a staggering 23%. As will the construction industry and other industries also experiencing significant pain. The most dramatic impact can be seen in the suspension of regular federal payments to tens of millions of American families. Exceeding the debt ceiling could also cause borrowing costs to increase, spreading problems globally. In practice, the US government has historically been able to borrow money at relatively low interest rates because it is considered a very safe credit risk in normal circumstances. The safety of US Treasury bonds has made them an essential building block in the world's financial system. But any financial instrument with value, based on US Treasury bonds, could be lost after Washington breached the debt ceiling, leading to volatility and uncertainty around the world. One estimate by the Brookings Institution has shown that breaching the debt limit could increase US borrowing costs by $750 million over the next decade. In particular, exceeding the debt ceiling will cause the dollar to decline and the reputation of the United States. According to the Council on Foreign Relations, over half of the world's foreign exchange reserves are currently held in US dollars, nearly 3 times more than any other currency. Approximately 60% of foreign exchange transactions are still conducted in US dollars. However, the US defaulting on its debt could potentially alter these figures as the value of the greenback may fluctuate. Most importantly, many countries believe that a debt default could damage the US. International standing revealing the extent of internal political turmoil in the country. even US Treasury Secretary Janet Yellen has acknowledged the consequences of the possibility of a debt default, which risked weakening America's global economic leadership and raising questions about its ability to protect national security interests. The credibility of a government is closely tied to its ability to handle crises. Violating the debt ceiling raises doubts about the US government's capacity, not only to respond to emergencies, but also to fill one of its most fundamental functions, paying its bills. If America can't do that, people and leaders in other countries might wonder what else Washington can't manage. If you found this video informative, don't forget to hit that subscribe button, give us a thumbs up, and share it with your friends and family. Your support helps us bring you more essential content like this.